Alrighty guys, what is going up? Welcome back to the Best Investing Money Management channel on YouTube. In today's video, we are going to be talking about Netflix. Should you buy? Should you sell? Should you hold? What should you do? So I hope you guys enjoy it. If you guys get anything in value out of this video, make sure you guys hit that like button, subscribe to the channel, and if you have any questions or concerns, make sure you guys ask them down in the comments. So for those of you that don't know what Netflix is, you guys must be living under a rock. But for those of you that don't know, Netflix is an entertainment and streaming company that streams movies, TV shows, and over the past couple of years, they've seen extreme growth. Until lately, we've seen extreme amounts of sell-off, right? When looking at Netflix's chart here, you can see right now we're on the 3-year weekly chart. So what that means is this full chart really represents 3 years of trading history. Each candlestick, each one of these represents 1 week of trading. So you can see before this, we had great growth, beautiful upward trends. Everything just looked very, very strong with Netflix. A lot of support near, this 475, some resistance up here at about 600. We had that breakout, hit $700. Everything was looking really, really good until we had some earnings, right? Earnings is pretty much when a company comes out and says, hey, this is kind of what's been going on in the company. And anytime you have a stock that has extreme amounts of growth, you need some extreme revenue. You need some extreme amounts of earnings. You need beat earnings. You need 30-40% revenue growth. And if we look at the 10-year chart, you can see, look at this thing. Lows here over 10 years ago is $7. Highs here at 700. So you can see in the matter of a couple years, we had a return of over 6,000% of value. And even, 2 years ago, we had a return of 122%, which is, it's insane. And anytime you have a stock go up that much that quick, that's not hitting their earnings, is due for a crash. And that's what we've seen. We kind of all knew it was kind of coming just because all growth comes to an end, right? If every year you're getting a 50% return on your money, and 1 year stuff starts slowing down in the company, that stock will start to sell off. And that's kind of what we've seen. From the highs, you can see we've had a crazy, 46-50% sell off in the matter of a couple of weeks. This was kind of expected. I think what kind of happened and really, really helped out Netflix was the lockdowns, right? Everybody was kind of locked at home, and Netflix saw a lot of growth from that. And given that growth, everything starts to come to an end. So we had kind of this perfect storm of losing some subscribers and just kind of hitting their natural audience, which was kind of expected. A company like Netflix can only grow so much, right? Just because there's only so many people that are honestly going to pay for their service. And that's kind of what they've realized. So if we look at Netflix's earnings right here, you can see the year over year revenue was only about 7.7 billion, which seems like a lot. Don't get me wrong, but that's only a 16% return and 16% growth. Not to mention net income was only 12%. And look at this. The net profit margin dropped 3.4%, bringing the total down to 7.88. So the net profit margin is pretty much the total amount of money the company kind of brings in as profit. So for every $100 Netflix brings in, they profit about $7.88 from that. Not to mention, guys, the company did have a net change in cash, which was negative 1.5 billion, which was a crazy fall of 716%. So now that we kind of understand why we had a lot of sell-off from this, answering that main question, should you buy Netflix, right? Anytime a stock sells off this much this quick, I think there's a lot of things a lot of investors like to look at. The very first thing a lot of people like to say, well, Carter, this is a straight up money. This is gold. There is some things, those earnings are only going to continue. I personally think we'll have a lot of consolidation. Netflix will kind of find their probably kind of like their middle ground. And instead of having, 20, 30% growths in a year, if we look out this is a 65% return. If we, look over here, this return was actually about negative 1%, but most are beating 20, 30% returns over the year. And I think they kind of hit that natural audience. So now we're only looking at probably a 7 to 8% return, very similar to a company is like KO. KO is also known as Coca-Cola in the mid 60s, 70s, 80s. The company was growing at an astonishing rate. And then they kind of hit their natural audience, their natural consumers. And it's very hard to grow once you do that. And I do think we're kind of in this transition of seeing Netflix turn into a company like this, where they possibly start offering some dividends or something along those lines. And I think this could be a little concerning for a lot of, ETFs or ETFs like that. Netflix, there we go. I think this is going to be a big concern for a lot of ETFs that hold this. This is going to really dilute those ETFs, and I really think we'll probably see a lot of ETFs start pushing this out of their funds. But for me, I do think it's just too high of a risk right now to hop in and get a couple of shares. I think we probably could see some more sell-off, and then once we find some established support, maybe we can do some swing trades. But for holding for the long term, too much of a risk. So I know that's not the greatest news, but I think we can start seeing a decline of Netflix, and this could not be, the greatest thing. Netflix could start offering a dividend or something like that to make it more interested or make it more interesting for investors. But right now it's just too high of a risk for me. So I hope you guys enjoyed it. If you did, hit that like button, subscribe. We will see you guys later. Remember to stay happy, stay positive, and stay safe. Take care, everyone.